What's up YouTube, it's Louis here. I hope you're all well. Today we'll be looking at Quant on the daily time frame, and we're seeing some positive things. As of yesterday, we saw that daily break, or the day before we saw that daily breakout out of this small range. Not completely out of the woods, because again, we've been talking about the 382. We need to actually close above this to signal continuation, as well as the 55 just above us at it's dragged down again $1 more after yesterday to 129. But yeah, with this breakout essentially above the 220 EMA and confirming it as support yesterday, which we've seen with Bitcoin. So I urge you all to check out the Bitcoin updates. It's the most important video of the day, and then move over to Quant, because if you know what's going on with Bitcoin, as Bitcoin can be a clearer picture a lot of the time, then we know where Quant should be heading as well. So with Bitcoin, we see that it's holding the 20 as with Quant. So what we should be anticipating is a retest of the high. I haven't done so just now, but yeah, that's our next attempt. So I think that's the high 125. So we did reject that psychological level yesterday, but it wasn't a strong enough rejection to close us below the 20. So we ran up into it and we ran back down, and we held essentially both of them. So you trap between support and resistance in this very tight range between 120 and 125. So this $5 tight range over here, you're just waiting for a daily candle close above one of them. I'm not personally trading this because I've been saying I want to see a close above the 382 and the 55, and to be honest guys, we need, for the bulls, we need to see Quant flipping this whole entire area into support and then taking it out, taking out the 786. That's the only way for me Quant flips bullish. You'll see what I mean on the weekly. It'd show you that the only way you can make this a bear trap is if you do this move over here, and when we go to the weekly, that'll look a lot clearer. So well, I say that, let's get rid of these no, I need the indicators. Let's get rid of the drawings. So you'd need to come back above, and that's not good enough because you came above the EMAs here. You formed a bullish cross. It wasn't good enough. You need to come back and test it as support. So we didn't do so. So again, I'm not going to get tricked when we come up. I want to see this all back tested as support for the continuation higher, because yeah, unfortunately we fell under it. So to make it a bear trap, we need to see a move like that. Yeah. Otherwise, otherwise the move up was a bull trap. You're coming back down, you're retesting this as resistance to continue lower. Do you understand that? I'll get rid of all these drawings now so we can go through that again. So just get rid of these little bits over. I'll leave that little range, but going to the weekly time frame, essentially all we did was come back and retest this old head and shoulders neckline right there. So if I get rid of the drawings now again, we got above those EMAs, everything flipped bullish until we got to that old head and shoulders neckline where we hit it, rejected it as resistance. All we needed to do, come back, flip this old swing high into a swing low where the bullish weekly cross is at, and if that is confirmed as support, we're going up for months and months and months and months. So if we reclaim this, I need to see it confirmed as support, because although that was the first step, you ran into a key resistance, came back, and you had to hold support, and you did not. So it essentially means that at the moment, this was a bull trap, because you should have held it as support, these EMAs, this old resistance or this old swing high. When you lose a swing high, you come to the swing low, and so now the next thing is tackling that resistance again, and these resistances, and this resistance 150. But again, in the future, we're going to have to face this key resistance once again. So the expectation is, because you fell back under the EMAs, this is a bull trap. So we're coming back up into it as resistance to continue lower to the 200 EMA next. As long as as the weeks go by, this will drag up more essentially. So yeah, what could be interesting, let's say we go up for a few weeks, this starts dragging back up, it starts lining up with this, and we start coming back down, and then you form a right shoulder, and you're like, okay, we need to hold this to keep this bullish. That's the only way Quant is going to stay bullish, as long as it's above the 200 EMA. And then you've got that nasty pattern, then you lose the 200 EMA, and then what happens then? You haven't got an uptrend anymore, and this is one ugly A, B, C, down to the wave one high here. $17, $16, $17. Of course, I don't want that. None of us want that, but let's not be disillusioned whatsoever. Let's be kept informed about every single potential move. And so zooming back in on the daily time frame, we're in this tiny $5 range. I'm not going to personally trade this breakout just because there's so many resistances in so many random areas. 125, which we're struggling with now. Then you got 126, the 382. Then you got 129, the 55. Then you got 134, this wick, and this wick over here, which is the bottom of this bear market range. Then you got the 050 fib at 142. Then you got the top of the bear market range, the psychological level 150, where we pumped to 400 from. And then we have 159, which is the 618, also where you found support, so it should be resistance. It's also where the capitulation began. And then you got the 786 at 188. And in actual fact, you can, if you know the fibs well enough, if you've played with them for, I don't know, 1 year or 6 months, 1 year, you should know by now that you can actually come all the way to the 786 and still continue in that old trend. So push, exhaust, continue. So that's why I need to see us running into 786, holding this golden pocket support, taking out the 786, and only then I'm starting to flip more bullish, be on the bullish side. Because again, although I'm calling for this upside, I'm not a doubter of it. I believe that we are going to go up, or we're just struggling with the 382 right now. We've been explaining you don't have to always go above this. You can just stop at it to continue lower. We've not been a denier of the pump. It's just that we're denied that it's a long term and sustainable. No, it should not be, because we start creating these bearish structures. So when you come back up, it should just be lower highs. And yeah, there's not much more to say. I keep repeating myself every day, but I know you guys like that, to keep you guys well informed. Don't worry, I'll be here on Monday because I remember this Friday. Thank you guys for tuning in. Like, subscribe, and comment. Send in a super thanks if you want. Check out the channel memberships. We just hit 9 channel members. There's 4,500 of you. There's only 9 members. Come on, guys. Let's get the channel members up. And head over to my Twitter for more information on my course. The link to my Twitter is underneath this video. Thank you guys so much. Like, subscribe, and comment, and peace.